Coin shop dealer, the part about gold price nobody tells you, I'm shell shocked. Gold just got knocked down in price and is heading to the floor. In this video, I'll break this down for you and show you the part about gold price nobody tells you about is that sleeping giant. Well, the giant is about to wake up. I went to my local coin shop yesterday and I spoke to my dealer and he told me something that made me immediately run home and search this up on the internet to see that if he was really just making this up, and he's not. This is an article by Ross Norman, and it says, speculative froth departing gold as China tightens trading conditions. Now, China has been stockpiling gold, as we know, for years. They're just leading the way in stockpiling gold. And really, we're looking at these BRICS nations as we look at the near future, that they're going to be creating a gold-backed currency. I mean, it's so clear. Now, this article says, not all buying is equal, and that is becoming apparent to gold. The article starts, arguably, the physical buying interest from central banks as well as Chinese retail purchases underpinning this market could count as some of the highest quality in that neither is likely to return to the market irrespective of the price action. It's a pure exercise in making money. Long or short, gold or soda ash futures, who cares? Like 12-year-olds high on E-numbers, the futures market can be a riot of activity, rife with rumor, and everyone keen to jump on the latest fad. The article says, if you marked the new gold paradigm to March 1st, 2024, before the yellow metal went near vertical and showed little regard for neither financial market indicators nor geopolitics, then arguably the gold floor is comfortably set at around $2,060. Now, I'm going to say that in plain English. What this author is saying is that gold had this big jump, starting March 1st, 2024. That was the big jump. And what he's saying is that if you're just ignoring geopolitics and you're just being a trader, and by chance you jumped in, then you were kind of lucky. Okay, let's keep going. The article says, that said, physical buyers who missed the rally will likely jump in as the market retraces, setting a much higher floor. So check this out. The author says, so China has tightened trading conditions as a safeguard in a gold market that it clearly deems to be too hot. Now, this is important. If China feels like this gold market is too hot and they're tightening, that means they're reducing the amount of gold that they're putting out, that they're allowing people to purchase. And we live in a global economy, right? Everything, just because we stack these gold American Eagles that I'm showing you on your screen here, just because we stack those and China is way across the pond, it doesn't mean that our gold market is in a bubble, because it is not. Everything is a global economy. And China, being this massive country that hoards wealth, if they tighten the amount of gold that they allow out into the market, that impacts our price of gold. And that right there is a sleeping giant that we often don't talk about in here in the States regarding our gold price. Regarding our gold price. Now, everyone has been looking at different factors about why gold jumped and how we could keep it up as high as it's been, right? We want it elevated. $2,400 would be wonderful because we want gold to keep going. We're looking, as gold stackers and silver stackers, we're looking at 3,000. We would like the floor to be 3,000. But what this article is telling us, this data shows us that, well, actually, the floor might actually be down at around the $2,000 range. And when we see a real correction, that's most likely where gold is going to land. The big question for everyone is, sure, a correction is absolutely coming. Yes, we see a correction coming, but where will the floor be? That means, where is gold going to land and hover? Look at silver. For the past I'll show you some silver while I'm talking about silver. This is just a proof eagle. For the past 2 years, really, the floor for silver was about $22. It was like hovering between 22, 24, sometimes up to 25. That was the floor for silver. And gold was really around 1,800, 1,850. So we would like the floor to be 2,300, 2,400. But what this article is showing is really, most likely it will drop even lower. And here, speaking of silver, this is an article here by James Hiresk, and it says, silver price forecast weaker as investors shift from safe havens on lower risk. This article says, silver prices are sharply lower on Monday, influenced by a complex mix of geopolitical concerns, economic data, shifts in investment strategies. After a spike due to fears of an escalation in the Middle East, which we were all thinking about, investors scaled back their positions in silver and other safe haven assets as tensions seem to ease. So this author is telling us that as tensions in Iran and Israel, as they ease, people are pulling out of silver. People feel more safe. Whenever people feel safe, they tend to put their money into other assets, other safe assets like treasuries, or they'll take low risk assets. Okay, this article says geopolitical tensions and investment shifts as fears of a broader conflict in the Middle East subside, with Iran and Israel stepping back from further escalation. Silver prices retract from their recent highs. This de-escalation prompted investors to reduce holdings in traditional defensive assets like silver and also U.S. Treasuries, according to this author. The shift was marked by a rise in U.S. Treasury yields, indicating a move toward riskier assets. So these are things that we need to look at as silver stackers and gold stackers. When we see a rise in U.S. Treasury yields, that often tells us that people are going to pull out of precious metals. And historically, that is the truth. But as we know, the past 3 weeks, that has not been the truth. Silver and gold have been acting the opposite of themselves. Right? Typically, when Treasury yields are high, that means that the price of silver, the price of gold is going to drop, but it is not. The past few weeks, gold and silver have remained high, even with Treasury yields. So it is not a precise science to say. It is not really precise, but look at yesterday and today, the past 48 hours, we are seeing that silver and gold are dropping. So the silver and gold might be really showing their true selves this week. This article also says that economic indicators and silver pricing show that investor sentiment was also swayed by anticipation of key economic indicators, meaning the Personal Consumption Expenditures Price Index, right, the PCE, a critical measure of inflation eyed by the Federal Reserve, is set to release at the end of this week. Earlier Consumer Price Index, CPI figures have already led to adjustments in expectations for Federal Reserve monetary policy, with the markets on now foreseeing a rate cut possibly in September. The key word there is possibly. So by the end of this month, right, we're going to be seeing data come out for the PCE, for personal consumption expenditures. We're all waiting to see how sticky is this inflation. Are we able to get rate cuts? And really, we all, through conversations the past month, we can tell we'll be lucky if we get one rate cut in December. By the way, if you're enjoying this content, please hit subscribe. Please hit the like button. It really helps to get this information out there. Now, with all of these moving pieces coming together for gold and for silver, what it shows us is that the past 3 weeks, it's possible the past 3 weeks were just an anomaly. It's possible that gold and silver are going back to follow their typical pattern, which is that when the dollar is strong, when Treasury yields are strong, silver and gold drop in price, and we might be going back to our old ways.